What's up, Broke Man Nation? My name is Adam and this is Broke Man Finance. In this video, I'm going to explain what happens when you miss those best bounce back days in the market, maybe because you got nervous about what was going on and you decided to sell. In this video, we're going to explain what happens to that portfolio if you do miss those days and how it can change that portfolio value drastically. But while you're at it, make sure you go check out the links in the description below. There's some really good stuff down there. Links to the type of savings account that I use that's given me incredible returns. Our Discord, Patreons, Stock Whispers for all breaking news, good conversation, and stock options. And if you find value in this video or anything that we're doing, I really hope that you consider subscribing. The market has been absolutely terrible lately. Everybody's talking about corrections and stock market crashes, and there's a lot of fear and uncertainty right now, and it's natural, especially if you're a new investor. What tends to happen is people panic sell, and then they want to buy back in whenever they see the market coming back around to a bull market, and they start buying back in at all-time highs, and that cycle continues, and they never really see any good returns, as opposed to what they would have seen if they would have just rode it out and just left it alone. If they would have just rode it out and remained invested, they would have been in a much better position. And here in just a second, I'm going to show you how much better. Personally, I like a good correction. I'm definitely a glass half full type of person. I don't look at my portfolio as losing money. I look at the market as going on sale, and now I can afford to buy even more. But I'm a long-term investor, and I understand that the market will eventually come back just as bullish as ever. So I like to take advantage of those corrections, and I'm in this for the long haul. I don't care what that number is right now, and I always have a little bit of money sitting on the side ready to invest just for these moments. Timing the market is something nobody can do. It's impossible. A lot of times we just get lucky if you want to be a realist about it. If somebody says that they can time the market, they're a liar, because then we can just buy and sell with zero risk. But what happens when we panic sell and we miss those days of 10 and 12% returns of the entire market? Our friends at Motley Fool have a scenario that I'm going to use, and I'm going to show you, I'm going to break down the numbers and show you what exactly happens. If you invested $10,000 into the S&P 500 on January 3rd, 2000 and left it completely invested until December 31st, 2019, for 2 decades, you would have received an average annual return of just over 6%. That $10,000 investment would have grown to $32,421. That 20-year period is roughly 5,000 trading days in which the market was open. Now, first let's look at if you missed the 10 best trading days out of 5,000, how would that have affected your portfolio? If you missed the 10 best days in that 20-year period, that $10,000 investment would only be $16,180. Now remember, that $10,000 investment with not missing the days would be at $32,421. If you missed the 10 best days in that 20-year period, that same investment would only be $16,180. Half. With just missing the 10 best days in that 20-year period, your investment would have been half of what it is if you would have just left it alone and let it ride. Obviously, this isn't individual stocks. We're talking about the S&P 500, which is the basis of really the U.S. economy. It's the 500 biggest companies, but it is a good reflection overall of the market. Now, if we miss the 20 best days, our overall return would be $10,176, meaning we would have only made $176 because we missed 20 trading days out of 5,000. Think about how crazy that is. Now, if we missed the top 30 days, we would be at $6,749, and now we're losing money. If we missed the top 40 days, we would be at $4,607. Now more than half of our money is gone. If we missed the top 50 days, we would be looking at $3,246. And lastly, If we miss the top 60 days in the market, roughly 3 months out of 20 years, in 2 decades, that $10,000 initial investment would be $2,331. This is why you have to have a glass half full type of mentality when it comes to the market. You have to look at this as an opportunity. If not, it will eat you alive and it will drive you crazy. Right now is an opportunity to buy stocks cheap. Sometimes some things that we thought maybe were too expensive for us, maybe it's Amazon, whatever. Now is an opportunity to buy it at a discount, and that's what you need to try to focus on. But we have to remain in the market to take advantage of those days that are 100% going to come. If we miss those days, we miss a lot of good returns. The proof is right there. A correction is different than the fundamentals of a company changing. That's when we should sell stock. But during a crash or a correction, no, we have to hold strong. We're going to be okay. You are going to be okay on the other side of this. It happens. Just like the old saying goes, be fearful when others are greedy, and be greedy when others are fearful. Right now is the time to be greedy. But that's all I have, folks. If you found any value or if that made any kind of sense to you, I hope that you consider subscribing and like the video. As always, I hope those stocks are going to go to green very soon for you and you make a lot of money. And I hope you stay safe and take care.